What's up, traders? I am Vincent Mokoteli from VinnBoss Signal Factory. This is not a financial advice. It's powerful education for those ready to level up. With the right mindset and real strategy, success is within your reach. Welcome to VinnBoss Signal Factory, where signals meet success. So traders, let's recap on what happened last week on the euro dollar. What we were expecting is a strong momentum to the upside. Did not get strong momentum to the upside, and as soon as this happened, we had to go and remember the past price action movement that happened. Now let me show you why we did not trade. Now this from last week was a new low, and then Powell came out and gave us the interest rate cut expectations, and then after this happened, this was already a new high. The structure to the upside was imminent. A new low again. What does that mean? It means we are having new low, new high, new low. I want you to check this in relation to this. And after this, we had already made a new high. That's why we were not continuing with the market. The last time you saw us in the market was on Thursday, when we were sure that this was structured to the upside, but if this structure break, we were only going to stay out. We did discuss this only with the real account traders community on Wednesday when the market, when the London session was closing. So with that being said, I could not come to YouTube and inform you guys. We had to wait for the weekly forex forecast to get the update. And with that being said, this is another complex structure. That is why we had to get out as soon as this made an attempt to make this new high. Overall, we are still structured to the upside, fundamentally so, based on the rate cut expectations coming in September. So this is exactly what to expect with the euro dollar and the majority of the dollar pairs going into next week. Now, without wasting much time, let me explain what to expect now going into this week. A continued pullback to retest our demand zone at 1.1654 will be a great place to look for buying opportunities or bullish patterns and formation to take out the target profit at 1.1726. This will be a fantastic setup, or to make your 1:3 risk to reward ratio. Rather, if we do get a deeper pullback to retest the second demand zone at 1.1628, this will be a great place to look for buying opportunities and a continuation to the upside to take out the exact same target at 1.1726, or make your 1:3 depending on how much you risk. But with us at the real account traders community, we are already familiar with why some trades are 1:3 and why some trades are going to make a new high from last week's high or a new low from last week's low. So without wasting further time, this was the structure on the euro and the Canadian dollar, and that is what I expect. Yet, if the market comes straight, does not retest this demand, any of the demand zone, breaks above, a pullback will be expected to look for buying opportunities right at 1.1726, and look for buying opportunities to continue to make our risk to reward ratio of 1:3 trade. Now, another last opportunity with the euro and the dollar is we might find that we get into a bit of a change of structure, which might be possible going into next week with the NFT coming out. We might find that we break again, and after this break we get a pullback. Then on NFT, this will be a fantastic place to look for shorting opportunities. 1:3 risk to reward ratio will be a fantastic setup for us to go down right here to look for selling opportunities after we break in our weekly breakout structure. Now, this is what we expect with the euro dollar. These are the three possible opportunities. The first being the test of the demand zone, the second being the break of the new high, and the third being the break of the weekly breakout structure, and then a retest of the weekly breakout structure, and then a continuation to the downside. Now let's go over and analyze the pound and the US dollar. Are you tired of guessing in the market? The beginner to pro ultimate course is not just another training. It is a fast track to trading mastery. Whether you are starting fresh or you've been in the game and can't seem to break the wall of inconsistency, this is where everything changes. What makes this course unstoppable? It has 4 different trading strategies that you can try with. Number 1, mastering Fibonacci price action strategy. Here you will learn the exact entry zones the market respects over and over again. Number 2, smart money concept. This will teach you to trade like banks and institutions, not just like retail crowd. Number 3, supply and demand zone. This will help you identify the market turning points before they happen. Wave analysis. This is where you will predict the price movement with precision. But this isn't just theory. When you enroll, you also get, number 1, our trading signal services with high probability trades delivered to you directly. You also get one-on-one mentorship, so you are never left wondering what to do next. Number 3, you get the proven strategy that works in the real market condition and not just in back testing. This is built for new traders hungry to learn and experienced traders hungry for consistency. It's your chance to move from confusion to clarity, from random wins to repeated results. The market will not wait for you. The difference between those who win and those who quit is the decision they make today. Enroll now and step into a world of profitable, confident trading with the tools and strategies and mentorship to back it up. So traders, with the pound and the US dollar, what did we expect from last week? It was the same, rather not too much movement. The reaction was fantastic. Remember, from the week before on Friday, we did have a buy from these levels of trying to get higher than the previous week's high. So we did not. Instead, we did get a break. We did get small profit from this on last week, and a continuation to the downside to retest this. We did not want to see this. That's why we had to take a small profit, and a break to the upside looked more imminent. And after the break, we had a retest of this liquidity zone, and then we are expecting a buying continuation to the upside. Yet again, this week, what we should expect, of course, is a retest of the demand zone to make our 1:3 risk to reward ratio, or a deeper one to make our 1:3 risk to reward ratio together, mixed with the new high target that we have here, because last week we did make this new high as we are still structured to the upside on this currency pair. Remember, I am bearish on the dollar based on the Fed rate cut expectation announcement that was made 2 weeks back on Friday. Right here is momentum. So with that being said, this is still a great place to look for selling opportunities. But if it does happen that we do not come and retest these levels here, we break above, a pullback shall be expected. Test 1.35 30, it will be a fantastic place for us to look for buying opportunities or bullish patterns and formations, and then a continuation to the upside would be fantastic. Of course, to look for 1:3 risk to reward ratio. In some aspect, if we do break below this weekly break of structure, a pullback also will be imminent. This is where we will only be looking for selling opportunities, and then the weekly break of structure will be looking to make 1:3 risk to reward ratio. This is still biased. This will be a bias to the downside only if we break the weekly break of structure at 1.3416. This is a fantastic zone to look for selling opportunities, especially if we do break below this weekly break of structure zone. So with that being said, these are 3 possibilities that are of course expected into next week: 1, 2, and 3. 2 being the break without a retest of the demand zone, and then a pullback that will be imminent to look for buying opportunities to the downside, and 3 being our weekly break of structure setup that we do have in place. So traders, let's go straight to the euro and the Canadian dollar to see the structure playing out. So traders, with the euro and the Canadian dollar, last week this was expected to go to the upside. The euro did fall against not only the Canadian dollar, but the Canadian dollar did gain momentum going into this week, which made our US dollar Canadian dollar signal fantastic for us last week, even though the trade itself went into the week not being one of the best setups, but being one of those setups that we were very careful and closely monitoring. So with that being said, this was what I did expect going into last week: go up, and then this was nearly a break of the structure, and then after the break of structure we did have this retest, but it was not enough to take it to the downside. This was the retest of the weekly break of structure right here. It was not enough to take it to the downside. Now, what do we expect from the markets this week? Of course, we do have setups whereby we are bearish to the downside. Now, this would be a great supply zone. Last week's previous weekly break of structure is now our supply zone this week. If we do get any pullback to retest the 1.6081, it will be a fantastic place to look for short opportunities to go to this low 1.6025, or to make that 1:3 risk to reward ratio. And with that being said, this also, if we do get a deeper pullback, of course, this will be a great place to look for selling opportunities to this low, to the new low of the coming week. Then we would also be looking for selling opportunities at 1.6142. This will be a great place to look for selling opportunities to the downside to make that 1:3 risk to reward ratio trade setup, or to take out our target at the new low at 1.6025. Now with that being said, this is opportunity 3. If we do break above without wasting time to the upside, then of course we will be looking for selling opportunities, rather a correction to our weekly break of structure at 1.6208, and then a buying opportunity to the upside. Remember guys, August is already out of the picture, meaning that good momentum is coming to the market on September, October, and November. We have about good three months of trading left in our calendar, so make sure that you get these fantastic setups that will be coming in September and in October. So without wasting much of our time guys, this is what I did expect. This is what I do expect. Of course, a fantastic place to go to the upside. And then with that being said, 1:3 risk to reward ratio right here. This will be 1:3. This is the second demand zone. And if we do not retest here, we might also be looking for, rather, let me remove this. If we do not retest here, we might be looking for this, a retest of this, and then a continuation to the downside as the euro has become weaker against the Canadian dollar, and the Canadian dollar has risen or has just jumped to one of the most attractive pairs going into this week, because it has turned to the positive side or has become stronger from last week. So this is what I do expect going into next week. What do I want to see? I want to see shorting opportunities on either of these two setups, or set shorting opportunities right here again. But buying opportunities will only be taken into consideration if we do have a break of structure during the week. So without wasting time, guys, let's go straight over to analyze the pound and the Canadian dollar. Welcome to VinnBoss Signal Factory, the home of real traders, real strategies, and real profit. Right now, you have a chance to join our exclusive real account traders community absolutely free until September 2025. After that, we will introduce a small monthly fee, but if you join now, you lock in all the benefits without paying a cent. Here's how you can join. Register under our exclusive XNS broker link, verify your account, fund with just $100 to activate your spot. Now, why do you have to join VinnBoss Signal Factory? Daily high probability trade signals backed by deep price action analysis, live market breakdown so you know exactly what is happening and why, real account traders only, no demo hype, just genuine market moves, private traders chat where we share setups, results, and moves before they even hit the charts. Direct mentorship from me, Vincent Mukotedi, to help you level up with your skill fast. Now, why would you choose XNS as your trading broker? It has ultra fast withdrawals, often in minutes, not days, tight spread, and no hidden commission eating into your profit, send account and high leverage option for flexible trading, regulated broker with over a decade in the market. The clock is ticking. Free access offer ends September 2025. After that, new members will pay to join. Don't wait until the market leaves you behind. Click the link, register, verify your account, and fund your account today. Step into a trading community built for winners. And on Wednesday, we did give a signal, of course, on the pound and the Canadian dollar. The last time we were trading this, we did mention that this is now structured to the downside, and this was the signal to sell here and to the stop loss here. 1:3 risk to reward ratio was somewhere here, and we did have a fantastic setup with the pound and the Canadian dollar. So that was the pound and the Canadian dollar signal. Now, what do I expect going into this week? I do expect to see a continued pullback, to look for bearish patterns and formations right at 1.8586. This will be a great place to look for shorts to the downside right here at to make a new low at 1.8488. And with that being said, this will be a new low or 1:3 risk to reward ratio. Rather, if we do get a deeper pullback, this is also a fantastic place to look for bearish patterns and formations at 1.8636. This will also include us to go for shorts that are fantastic and to take out this new low, or to make that 1:3 risk to reward ratio with the pound and the Canadian dollar. Also, if we do have continued momentum without stopping to continue to the upside, a pullback will be necessary for us to look for buying opportunities right here at 1.8695, and then a continuation to the upside to make that 1:3 risk to reward ratio. These are the three possible moves that are going to happen into next week. We do have to pay attention to each of these, and this will be a fantastic setup also for the rest of the traders who are following me on YouTube and who are also on our free WhatsApp group. So guys, this is the pound and the dollar explained thoroughly with this. So if we do go to the downside without retesting any of this, of course I'll be looking for a retest of this and then selling opportunities right here to contribute to make that 1:3 that we always expect if we do not reach our supply zones right there. So without wasting further time, let's go straight over to the pound and the euro, and the currency pair is called euro and pound. And with the euro and the pound, last week I did mention that we are now structured to the upside and we are not looking for any selling opportunities. So last week we did have this expectations to go to the upside without having a deeper pullback. Rather, we did have a deeper pullback with the pound coming in strong, and we did have a secondary entry here, pound coming in strong, and we had a third re-entry here, which was a fantastic signal to go with from last week, and we did take out the profit target right there. Now, what do I expect going into this week without wasting much time? With the pound and the Canadian dollar, what do I expect? I expect to retest this first demand zone and then a continuation to the upside to make that 1:3 risk to reward ratio, or a deeper pullback to the second demand zone at 0.8631 will be imminent also to make that 1:3 risk to reward ratio, or to make that new high at 0.86730. This will also be a fantastic setup. But if we do have a break below our weekly break of structure, of course, a retest to continue to the downside will make us reach that 1:3 risk to reward ratio. But I do think we are still structured to the upside. The euro is still stronger, or strong to the upside, more stronger than the pound. Structure wise, it is still more bullish than the pound. So this is it for us with the euro and the pound. What we want to see right now is the last but not least, the US dollar and the Canadian dollar. Are you ready to grow your money the smart way? At VinnBoss Signal Factory, we have investments called currency invest trade. Our investment starts small with as little as 5,000 South African rand or $300. We will help you double your account in just 6 months. This is not a get rich quick scheme promising you millions overnight. Instead, we focus on safe, stable, built on proven trading strategies and disciplined risk management. Here's how it works. You book your trading investment portfolio tailored to your goals with us. You invest your capital securely through our trusted system. We provide weekly updates showing exactly how your investment is growing and being managed. Transparency and trust are the core of everything we do, so you always know where your money stands. If you want consistent, reliable growth without the hype, this is the opportunity to step into the world of professional trading and investment with confidence. Don't wait for luck. Choose steady success with your portfolio today. Watch your capital grow with VinnBoss investments of currency invest trade. So traders, with the dollar and the Canadian dollar, what do I expect? I expect to see a continued pullback to retest the supply zone right here at 1.3797. It will be a great place to look for shorts, and shorting opportunities will make us more pips right here at 1.3725. But if we do not, or the trade is not sufficient enough, which I don't think it will be, we will be doing 1:3 risk to reward ratio. And if we do want to, we can wait for the second supply zone at 1.3815 this will be a fantastic place to look for selling opportunities to continue down, to make the new low at 1.3725 or make that 1:3 risk to reward ratio. With that being said, these are the first demand setups that we'll be looking for. If we do not meet the required pullback strength, continuation, a retest will give us that 1:3 setup that we want, a break of the new low, a retest, and looking for bearish setups right here to continue to the downside. Rather, if we do keep on coming and we do break out this last week's high, we would come and retest, and then after the retest, a continuation to the upside to make that 1:3 risk to reward ratio is a fantastic setup for us going into next week. And that's it from VinnBoss Signal Factory. Without wasting much time, thank you for watching this video and happy trading going into next week.